Let's say you've got into the market at the right time and a trade is going well. Do you close your trade and take a profit now, or do you wait for the market to go a little bit further? Without looking at a chart, it's hard to tell, but this is a dilemma for most traders with a successful trading strategy. At some point, you've had a trade going the way you wanted, and then the market suddenly turned and you lost most, if not all, of your profit. Or you've closed the trade and seen the market continue on, laughing at all the profits you've missed. Today, we're going to talk about a strategy or technique that could help you reduce the uncertainty in this situation using the humble Bollinger Bands. Bollinger Bands are often one of those indicators that traders have in their charts, but they don't pay all that much attention to. But that doesn't mean they can't help us know when it's time to close a trade. Here, we have the Aussie versus the dollar on a daily chart. On the bottom, we have a MACD indicator, which we'll be using to trigger our trades, and the gray area on the chart is the Bollinger Bands. Notice how when the market moves, it kind of pushes one side of the Bollinger Bands depending on which way it's going. Now, if we're using MACD as our entry indicator, we'd wait until the histogram crosses the signal, which we have right here. Let's draw a line to mark the spot as if we'd sold the market short at this point. What happens next? Well, MACD is spot on and the market goes down. It keeps going down until the MACD crosses the null line. Okay, now we've bagged ourselves a good 300 pips. When should we get out of the market? There's a little turnaround here. Should we get out now? You might think, why get greedy and close the trade? After all, the market kind of seems to be trending upwards, right? Let's see what would happen anyway, because we're not actually risking any money here. So, the market goes through a bit of a correction and then continues down further. Good thing we didn't get out of the trade. Let's go a little bit further. Well, what about now? The MACD histogram crossed through the signal line. That's a bullish indicator. Surely we should get out of the market now, right? Well, as you can see, if we did, we'd have missed out on even more pips, further 200 pips as a matter of fact. So, how could we know this would happen? Let's look at the Bollinger Bands. The market kept pushing the bottom of the bands further down as it went. The size of the bands, in other words, the distance from the top to the bottom, gets bigger when we have a strong move. During corrections, the distance between Bollinger Bands shrinks a bit. This could be an indication that the market is going to turn around and it's time to pay closer attention. But the market doesn't really turn around after a strong move until the opposite side of the Bollinger Band catches up with it. With both MACD and Bollinger Bands telling you that it's time to get out of the market, then you should. There's still a little bit of move left, but we can't get everything. Using Bollinger Bands helps you get a few more pips out of a move, and you shouldn't get too greedy. Let's see what happens when the market is going up, like over here. We'd get into the market when the histogram crosses the signal on the MACD. We'd get to the peak of this move and then we'd have a correction. At this point, MACD is telling you that the market is about to go down and you should close your trade in short. But the market hasn't reached the bottom of the Bollinger Bands, so you should stay in the market and get the next move upwards. But you can't trust Bollinger always. Here, at the start of the example, the bottom of the Bollinger Bands hadn't caught up with the market, but the MACD is showing twin peaks, which is a bearish divergence. With two strong signals from the MACD, it's time to get out of the market. Essentially, with this strategy, you're looking for two signals to confirm each other and make sure you don't miss out on extra pips you could have made as the market continues its move. Anyway, that's it for today. I hope this helps you make some more money out of your trades. Don't forget to comment if you have any questions down below. Thanks for watching and happy trading!